Wedbush's managing director, Dan Ives, claims that the recovery narrative has started. For Musk, the comeback kid narrative is just now beginning to take shape. China is starting to show signs of improvement, and I predict that the upcoming delivery will mark the end of the worst that China has ever experienced. On August 8, Musk's comeback kid tale will begin with robotaxi. This stock, in my opinion, is going to have a tremendous run in the second part of the year. Though demand for EVs has been muted globally, China is the main factor. For years, China was a huge benefit, but as of late, Brian, those price reductions aren't happening. Thus, you're beginning to witness stabilization in China's demand, and the stock, in my opinion, is telling you that. We think the delivery figures for next week are just one more indication of that. When it comes to Tesla, the worst is behind us. According to experts, Tesla's stock could experience a notable surge in the second half of 2024 as a result of the company's strategic initiatives, which include their creative strategy of increasing demand through financial maneuvers rather than simple price reductions. Regarding their possible impact on the market, there is much to consider. We'll go in depth on the much-awaited August 8th robotaxi event, which has the potential to revolutionize Tesla's income sources. We'll also examine the larger economic picture, which includes the dynamics of interest rates and the possible outcomes of the next presidential election. Come along as we dissect these dynamics through in-depth data insights, professional judgments, and a market trend analysis that may pave the way for Tesla to have a spectacular second half of 2024. This episode is jam-packed with insightful information, regardless of your level of experience with investing or general curiosity about Tesla's future. Please remember to hit the like and subscribe buttons before we move on. Let's get started with the latest news about Tesla stocks. Renowned Wall Street analyst Dan Ives has predicted in recent remarks that Tesla's stock will see a significant increase in the second half of 2024. The imminent July 2 announcement of Tesla's second quarter delivery figures is crucial to this projection. The stock has performed exceptionally well, surpassing key resistance levels and briefly surpassing $200 a share last Friday, according to observers. The recent increase in value indicates that investors are becoming more confident that the Q2 results could be excellent and lead to more gains. Let's now explore Tesla's future plans. In addition to the immediate emphasis on the Q2 delivery figures, additional significant advancements are expected. Notably, it is anticipated that the August 8th robotaxi event would unveil noteworthy advancements in tactics that will provide light on Tesla's future prospects. The excitement on Wall Street around this occurrence indicates that it could push the stock further higher. It's crucial to keep in mind, though, that Tesla hasn't had a great first half of 2024 due to price reductions and lower delivery figures. The second half of the year looks promising due to possible interest rate reductions that could increase demand for Tesla automobiles in general. Beyond Tesla, the larger dynamics of the market are also quite important. With the exception of Tesla, the S&P 500 has experienced gains mostly driven by significant tech companies. Tesla's stock may benefit greatly from a general market rise, especially given the company's anticipated significant EPS growth in 2025. What do you think this audience should expect from Tesla in the upcoming months? Do you believe that Tesla's performance will be supported by larger market trends? Let's talk about how these events might affect the market landscape as you share your ideas. Recall that next Tuesday, when the Q2 delivery data are released, will be the real test. There is conjecture that Tesla may surpass Wall Street projections, potentially serving as a noteworthy impetus for the stock. Watch how Tesla's stock performs in the next days, as it may reveal whether the anticipated rise comes to pass, especially as the August robotaxi event draws near. The path of the stock market in 2024 will surely be influenced by a number of factors, including the actions of the Federal Reserve and the state of the overall economy. It might be a Trump portfolio firm if Trump wins and rolls back some of these EV incentives. Indeed, I would say that Trump PR Musk a Trump presidency would be bullish for Tesla and negative for EVs. We saw that when you showed that across Riv and others, and I think it also speaks to the Biden administration. Musk has really been an afterthought. I think if Trump is in the White House, Musk becomes more prominent, which is bullish for Tesla, especially if you start to see those EV rebates roll back negative for the industry. Tesla is in a huge position strength, which is why I believe as you start to see more indications of a Trump presidency that is bullish for Tesla. A better case would be a shift in the market's emphasis away from the leading tech titans, known as the Mag 5 or Mag 6, which comprise businesses like Apple, Nvidia, Google, and Amazon. Interestingly, at the end of the first half of the year, these companies had already seen significant profit taking, suggesting that future changes in market dynamics may occur. The less hopeful prognosis, nevertheless, is dependent on the recessionary threat that lurks in the wings in the event that economic indicators begin to rapidly deteriorate. The consequences can cause major market disruptions, which is especially worrisome in light of the strong earnings per share growth of around 15% anticipated by 2025, a goal that, under tight financial times, can become elusive under such circumstances. There may be significant declines in market capitalization, especially if the recession is more severe and lasts longer than expected. It's important to realize that official sources and financial institutions frequently release economic data slowly, so market reactions may not always reflect changes in the real economy. However, the tangible financial health of people and businesses frequently offers a more immediate, albeit anecdotal, indicator of underlying economic stresses. These in-the-moment observations can occasionally present an incredibly diverse image, revealing strain indicators that are not yet evident in the more comprehensive economic statistics. Taking these dynamics into account makes it crucial to keep an eye on the official economic data as well as the financial realities at the ground level, which work together to define the market environment. The intriguing thing about this is how it corresponds with the historical electoral cycle. While there may not be any big changes in the near future, underlying economic stresses may become more apparent after the election. Trends indicate that major downturns are often averted in election years, possibly as a result of government initiatives. If big tech stocks like Apple, Amazon, Nvidia, and Google see corrections, the market as a whole may see a more extensive market rally as investments start to flow into other sectors. This would signal a shift from concentrated gains in big tech to a broader distribution across different industries, which could potentially lead to a healthier overall market dynamic. Examining previous election year market trends reveals a noteworthy pattern. Historically, markets have experienced substantial corrections of approximately 13.3% on average. However, this year is shown to be an anomaly, with only a 5% correction recorded thus far. This stark contrast in historical norms suggests that a more substantial correction may be imminent, especially in sectors that have driven the market to nearly all-time highs. This anticipated correction is most likely to affect the technology sector, particularly the major players known as Mag 5 or Mag 6 stocks. These stocks, which include some of the biggest names in the industry, have driven the market higher but now seem especially vulnerable to a downturn. Given their recent rapid growth and high valuations, these stocks could have a significant negative shift. The stock of Tesla appears to be more resilient to potential downturns, which may be attributed to its current valuation, which already accounts for some negative scenarios. Conversely, stocks such as Nvidia, Apple, Google, and Amazon may not be as well prepared for an economic downturn. Looking ahead, the second half of the year holds promise for Tesla, particularly given the potential for improvements in margins and increased demand, which is expected to be a significant event to watch in 2025. On August 8, further details about the introduction of the robot taxis will become clear. This invention has the potential to significantly impact Tesla's market performance and reignite market speculation. The presidency of Donald Trump, as analyst Dan Ives has indicated, with all these factors playing out,